Right. So I want to welcome those of you that have joined us already for tax filing requirements for small business. We have Ina Kiseleva. She's done this presentation for SCORE in the past, and be ready to learn a lot. So she's got lots of information to share with you. We're going to start off, and I apologize, I've got the one person out of the two that's with us today, but I have Johnny Long and Robert Nichols with East Cambridge Savings Bank. And I believe Robert's going to tell us a little bit about the bank, and then we'll continue on. Go ahead, Robert.
Great. Thank you for the intro, Teresa. And thank you everyone for joining the webinar this afternoon on the topic tax filing requirements for small businesses. SCORE has been a great partner to work with, and we continue and are willing to provide these outstanding workshops. East Cambridge Savings Bank is a mutual savings bank. We're not a publicly traded company, and we do not have investors. Mutual savings banks have been around since the early 19th century and are still common in New England. Our bank was founded in 1854 and has been operating with the same name and charter since then. We have never been acquired or sold to a larger bank. Now, since East Cambridge Savings Bank is a mutual bank and does not have shareholders, we reinvest profits locally through mortgages, loans for small businesses, and supporting nonprofit organizations. Thank you.
Thank you. Okay, so I want to just tell you a little bit about SCORE if you don't know already. This is actually our last training event for this year. We'll be starting up again around January 11th, I believe, with our Excel, and then another in business planning coming up that week. So definitely watch our newsletters for all the new presentations we have available coming up in January. The most important thing that SCORE does, however, is mentoring. Our mentors are volunteers, and they offer their services for free, and your sessions are confidential. They do video, phone, and email. We are going to be phasing in more face-to-face starting in January, so we're excited about that as well. Our mentors have a wide range of experiences that they're looking to share with folks. They work with people that are thinking about starting a small business, in the process of starting a business, or already are in business. To make a mentoring session appointment, you do not have to have a business plan. You do not have to have your business registered anywhere. You could be at the beginning stage of, I think I want to try and do this, and they will help you think through and plan things. A lot of folks ask me how that first mentoring session might go. They usually range around 30 minutes roughly. They will be a get to know you. You'll find out about your mentor as well as they'll find out about you. They will find out what your goals are, what your questions are, and create some sort of plan for moving forward. You will continue to work with that mentor if you so choose. And sometimes other mentors are brought in to fill in gaps, as your needs expand along the path. So it's a pretty dynamic process, and I strongly encourage you to reach out. How do you do that? You can put a note in chat and say, hey, I just, to the panelists and say, hey, I want a mentor, and I will have the right chapter reach out to you. You can also go to the websites listed here, and there's a section to ask for a mentor. You can do that as well. While you're on that website, take a look at the library section. There is a ton of information and resources and templates and all kinds of things that would be beneficial for you. There's a little search. You can search on a cash flow projection. I mean, all kinds of things that you can't even imagine that are on those websites for you to look up and learn from. This presentation generally has a lot of questions. I strongly encourage you to put your questions that you want asked to our presenter today into the Q&A tab. We will answer questions throughout as she pauses between different sections. So any questions that are in that Q&A tab, we will try and address and will be read out loud to our presenter to answer. Everything else can go into chat, and that's totally fine. Anything that is not related to something you want read out loud to the presenter can go into the chat. Okay, that concludes my portion. So I'm going to go ahead and stop my share And I am going to turn it over to Ina. Oh, you're on mute.
Good afternoon. Let me just share my screen with you. And nice to see you again here, although I can't really see you, but thank you for attending. We will start our 2022 tax update for small businesses shortly. The only thing is that I'm now getting messages that my internet connection is unstable. So to make it a little bit more stable, I'm gonna shut off my screen and just talk. Okay, can you see my screen? Can you please confirm the presentation screen?
Yes, I can see the presentation screen.
Very good, thank you. Now I just have to figure out how to shut off my video. All set, very good. So first of all, the disclosure notice. This presentation was prepared solely for general informational purposes and is not intended to provide and should not be relied on for accounting, business, financial, investment, legal, tax, or other professional advice or services. Before making any decision or taking any action that may affect you or your business, you should consult a qualified professional advisor. The speaker shall not be responsible for any loss sustained by any person who relies on this presentation. So for today's agenda, first I wanted to cover selective provisions of the Inflation Reduction Act of 2022 that came into effect in August. Then we're going to go through general topics starting in business. We'll review entity types and registration, types of taxes, or how to maintain records of your business, preparing for tax filings, and some tax deductions and planning options that are available for 2022. Okay, starting with the Inflation Reduction Act of 2022, please note the IRA here does not stand for Individual Retirement Account. It stands for the Inflation Reduction Act. Among other provisions that were implemented or passed with this act, I summarized some provisions or lack of such that may be applicable or of interest to you. Again, these are by far not all provisions that may apply to you, but that may apply to you. And if you are interested in taking advantage of any of these credits, I recommend reaching out to your CPAs and further researching on irs.gov. irs.gov is a very good source of information. There's a search field and you can search for topics of interest to you. So first of all, you may hear about the minimum tax, 15% minimum tax on corporate book income for corporations. But note, this provision only applies for corporations with profits over $1 billion. So this one most likely will not apply to you. The second item I wanted to bring up, that part of the initial draft of the act, Biden administrations were trying to get rid of the $10,000 state tax deduction limitation. However, it is still in place, and it's still in place through 2025. Now, what did happen is that extension of excess business loss limitation is again effective for additional 2 years, and now it applies for tax year beginning after December 31st, 2020, and before January 1st, 2029. Some of you may be in business of research and development, or you have research and development expenses that may qualify for the tax credit, for the R&D tax credit. And however, if you cannot take advantage of this research and development credit, you may be able to claim this credit as a payroll tax credit against the employer's share of Social Security and Medicare, up to a maximum credit of $500,000. It used to be $250,000. Any credit amount in excess of the payroll tax carries forward to the next quarter. So if you think this may apply to you, you really need to talk to your CPA. You will require to do an R&D study, and but then at least you can claim a credit against your payroll taxes for the first 5 years of the existence of your company. The other interesting provision that I thought I would mention was the health insurance premium tax credit, also known as PTC. It's a refundable credit available to eligible taxpayers who purchase health insurance on the health insurance marketplace. Affordability percentage is temporarily changed to increase credit for individuals with income over 400% of federal poverty level, or also known as FPL. All individuals with premiums in excess of 8.5% of their household income are eligible for the PTC from 2023 through 2025. Originally, this credit was available only for 2021 and 2022. Another provision that was updated or extended or increased was the energy efficient home improvement credit. It is now extended for energy efficient components placed in service before January 1st, 2033. And it's increased from 10% to 30% of the amount paid or incurred by the taxpayer. Also, some lifetime credit limitations were repealed and replaced. So for example, 500 lifetime credit limitation is repealed and replaced with an annual credit limitation of $1,200 per taxpayer per year, as opposed to lifetime, with annual sublimits. For example, 600 for qualified residential properties, such as qualified property for central AC, electric panels, natural gas, propane. Also, 1,200 annual limit is increased to 2,000 for specified heat pumps, heat pump water heaters, and biomass stoves and boilers. Also, you probably heard of the home energy audit. So the credit for the home energy audit is increased now to $150. Also, for qualified property placed in service after December 31st, 2024, no credit will be allowed unless such item is produced by a qualified manufacturer and the taxpayer includes the qualified product identification number on the tax return. So I know this amounts seem very small in comparison to what your expenditures or expenses might be, and that would be associated with putting in place central AC or electric panels, so natural gas or propane instead of oil, for example. But you have to take into perspective that this is a credit, not a deduction. So the credit is a deduction from your actual tax liability, while the tax deduction is the decrease in your taxable income. And then tax is imposed on your taxable income. And then once you have the tax, again, you can deduct tax credit from your actual tax liability. Another credit that was extended and increased is the clean vehicle credit. The maximum clean vehicle credit is increased to $7,500 per vehicle, with no limitation on the number of vehicles eligible for the credit. So this is for personal use vehicles, okay? It consists of $3,750 credit for meeting a critical minerals requirement and $3,750 for meeting a battery component requirement. And please note, the final assembly of the vehicle must occur in North America, the entire continent, which includes Canada and Mexico. Note there are dealers and taxpayers, you guys, you actually can go to this website that I provided here to confirm where the vehicles were assembled. So continuing with the clean vehicle credit, please note that the clean vehicle credit is disallowed if the manufacturer's suggested retail price is in excess of $80,000 for vans, SUVs, and pickups, and $55,000 for all other vehicles. And also, the clean vehicle credit is disallowed if the lesser of modified adjusted gross income of the taxpayer for the current or preceding tax year exceeds the following threshold amounts: $300,000 for taxpayer filing joint returns or surviving spouses, $225,000 for head of households, and $150,000 for all other taxpayers. $150,000 for all other taxpayers. Also, starting with 2024, taxpayers purchasing eligible vehicles can elect to transfer the clean vehicle tax credit to the dealer, provided that the dealer meets the registration, disclosure, and other requirements. I'm not sure how it would impact your purchase. Maybe you will get a decrease in the purchase price, but we'll see when it comes. Now, they also added a credit for previously owned vehicles. So if you decide to purchase used vehicle instead of new vehicle, and it meets specific requirement, you can also claim a credit. So it's effective for sales occurring after the date of enactment, which is August 16th, 2022, through December 31st, 2032, okay? It equals to 30% of a used electric vehicle sales price, up to a $4,000 maximum credit limit. The purchase price of the previously owned electric vehicle must be $25,000 or less, okay? And the previously owned vehicle must meet the same eligibility requirements for the new clean vehicle credit. And it must be a model year that is at least 2 years earlier than the date of sale, all right? They also added a credit for qualified commercial clean vehicles. So for you guys who are in business and you use commercial vehicles, and there's now a credit for the qualified commercial clean vehicles. Now the credit for qualified commercial clean vehicles is equal to the lesser of 15% of the qualified vehicle's cost, or 30% of the qualifying vehicle's cost if the vehicle does not have a gas or diesel power internal combustion engine, or the incremental cost of such vehicle, all right? So the qualified commercial clean vehicle is limited, credit is limited to $7,500 for light duty vehicles weighing less than 14,000 pounds, and $40,000 for all other vehicles, that is heavy duty vehicles, okay? So the joke of the day, I thought I would end this here. And those of you who listened to me speak before, you've seen this joke, but lastly, the IRA provided the IRS with approximately $80 billion in additional funding through September 30th, 2031. and they have to expend it on taxpayer services, which is really lacking and lagging at this point. I'm sure if you have received a notice from the IRS, it is most likely that you were not able to get through to them in one phone call, or even two, or even three. We all struggle with it at this time. So IRS was provided now funds to hire more employees. And I believe they're planning on hiring around 20,000 employees. If any one of you would like to join IRS, this is the time to do it. They will also spend it on tax enforcement activities. Auditing small business practices right now is one of the #1 priorities for the IRS, for whatever reason it might be, but they think it's actually, they think that a lot of taxpayers with small businesses don't report all of the income. If you claimed any credits, let's say on 2021 tax return, including earned income credit, educational credits, you may have been picked for audit, for desk audit. I know some clients of mine that have been picked for such audits with the educational credits, at least. Also for the operation support, and they really need business systems modernization. As you can imagine, IRS is subject to a lot of hacking activity and phishing activity, and you know, they have basically information on all of the taxpayers in the United States, and this includes not just US citizens and green card holders, but pretty much everyone in that files that tax returns. So so part of this $80 billion will go towards the business systems modernization. So let's start with our starting a new business. You can see I have kind of 8 points that I thought would be important for every new business owner or existing business owner to consider. If you're an existing business owner, if you haven't considered it previously, it's probably something that you should. So we will discuss business or hobby on the next slide, but for, you know, let's start here with what type of entity. You may choose to use sole proprietor, partnership, or some form of corporation as a legal entity for your startup business. There's no right choice, ultimately, right? But there's only the best choice entity choice for your company. So you really need to determine, if you just talk to someone and they say, oh, the best company is LLC, or the best one is the sole proprietorship, or the best one is S corporation, it is not necessarily true. It has to be right for you and your business, okay? And that could be any type of business or any type of entity, may specifically apply to you. The whole idea is how it's being taxed, and ultimately, what is your exit strategy from that business? Are you planning it to running it for the lifetime for your lifetime as much as possible? Or are you planning, you know, starting up a business and perhaps selling it in the future, in the short-term future, long-term future, depending really on what your plan is and what you're trying to do. And that will determine what type of entity you should choose. I strongly suggest that you consult a tax advisor and an attorney in choosing what type of entity you need. But just to make sure, please make sure that you talk to both of these types of advisors, either attorney and tax accountant, because your tax accountant will have a little bit different perspective on what type of entity to choose that an attorney might have. All right, so then the third point here is, what's your tax obligation? Once companies start earning revenue, there are myriad taxes that need to be taken care of on a recurring basis. Given your location and legal entity, the question is, what does full tax compliance look like for your company? You may be responsible for state and federal taxes, licensing fees, payroll taxes, 1099s, and more. And if you expand overseas, okay, that just adds the complexity and tax filing requirements, and you need to really understand that. Until recently, the IRS accepted an evidence that the taxpayer relied on the advice of the CPA or attorney when an error was made. However, IRS no longer accepts this as an argument of reasonable cause in case of voluntary disclosures, for example. This means that more than ever, it is taxpayers' responsibility to understand their tax obligation. And that's why, once and again, I advise you to choose a tax advisor from the beginning of your business. Interview people, reach out to them, make sure they're qualified in all aspects. And if your business grows and outgrows the tax advisor, you should consider changing a tax advisor to make sure that your tax advisor can service your company based on its growth, based on its size, based on its geographical footprint, okay? Now, do you need a bank account? Do you need a bank account or separate credit card? That's a question that I get asked quite a bit. And it is surprising how many entrepreneurs don't separate their personal finances from their business ones, okay? Especially single member LLCs or sole proprietorships. But even so, even without that, really, I've seen it all. At worst, you can be, at best, it leads to the confusion. Okay, so when you bring your papers to your CPA and they're trying to figure out what all of your deductions or income is, it just creates an enormous amount of confusion, and it adds to the fees you pay to the accountant. At worst, you could be sued and forced to pay additional taxes. Your company could even be stripped of the corporate status. So avoid this by establishing corporate checking and savings accounts and maintaining a separate income statement and balance sheet. Now, what are allowable business deductions, ordinary and necessary? Yeah. So from the moment you start up, you can deduct all ordinary and necessary business expenses. This is a broad definition that can include everything from work-related travel to office supplies to client dinners. You can even deduct such things as organizational fees and your prorated rent and utilities. If your office is in your home, keep track of expenses as you go rather than waiting until filing time to dig up those old receipts. That's why, again, I strongly advise that you pick accounting software with the advice of your CPA. That will help you to keep track of all those expenses and properly record them. Now, are you using the right tools? Consider that. Startups need to figure out how to track financial transactions, expenses to revenue earned, billing, and all financial obligations. So again, going back to the accounting software, at least 80% of our clients use QuickBooks because it is relatively inexpensive and easy to use. And there's also a Sage and a myriad of other options, whether they're downloadable, or cloud-based, like software or cloud-based software. When finding an accounting system, choose one that allows for dual entry accounting. Even more importantly, think long-term. You need a system that will work with you now and grow with you to be the right system 5 years down the road and beyond. Okay. Now, another question that I'm always being asked, do I need to pay quarterly estimated taxes and when? So generally speaking, yes. Once you have a business, you need to pay estimated tax payments. For business purposes, the penalties are determined if you underpay your taxes on quarterly basis. So your quarterly basis, quarterly payments need to be based on your current income levels, not the prior levels. For individual tax purposes, for example, there's a safe harbor rule that allows you to base your estimates based on the prior year. But for business purposes, you really need to base those estimates on current year earnings. There's some flexibility as far as I'm concerned, and you just need to understand that if you underpay estimated tax payments, there will be penalties and interest assessed. So let's talk about hobby versus business. A hobby is an activity that people pursue because they enjoy it and with no intention of making a profit. Many people engage in hobby activities that turn into a source of income though. Now, on the opposite side, people operate a business with an intention of making a profit. This is the biggest distinguishment, right? Is like, for hobbies, it's fun. When you start a business, the intention is to make profit. The taxpayer carries out activity in a business-like manner and maintains complete and accurate books and records. Okay. Now, what factors should you be considering? I'm providing a bullet list of activities that you should consider. Every one of them is as important as the other. There's no weight given to any of this specifically. So number one, the taxpayer puts time and effort into the activity to show they intend to make it profitable, right? So is it your full-time job, so to speak? The taxpayer depends on income from the activity for their livelihood. So if you have a full-time job and you get W-2 from somewhere else and you have this hobby part-time, or you have some sort of activity that is part-time, if you can demonstrate that this is, you operate in a business-like manner, it may be considered a hobby, So eventually some people do that. Actually, they are full-time employees, and then in parallel, they started business. And then eventually they hope to quit their full-time job and run business on a full-time basis. It all depends, like, with what intent and how much effort you put into that business and what it does, right? So the next one, the taxpayer's personal motives for carrying out the activities such as general enjoyment or relaxation. The taxpayer has enough income from other sources to fund the activity. And losses are due to circumstances beyond the taxpayer's control or are normal for a startup phase of that type of business. There's a change to methods of operation to improve profitability. So if you can, if let's say there's an audit and IRS questions whether your business really a hobby, can you demonstrate that you are improving operations or changing up the methodology of how you're operating the business or and strategies in order to improve profitability? Can you demonstrate that? then IRS will consider this. There's some other factors as well. You can review them on your own. Please note the biggest difference of hobby and business is that hobby losses are not deductible, okay? And hobby income is actually reported on Schedule 10 on Form 1040, Schedule 1, Line 8, okay? So let's take a look at what type of business entities are available to you. So first of all, and the easiest one is sole proprietor. Sole proprietor, no registration required with the Secretary of State. You don't even need an EIN number unless you hire an employee and you have to do payroll, okay? And all you have to do really is attach Schedule C to your Form 1040, your individual tax return. Now, if you decide to create a limited liability company, which is another type of entity, it's an LLC, it depends on what you choose to do with that LLC, so to speak. Let's leave LLC for now and we'll come back. Okay, let's go to the general partnership or limited liability partnership. You can, if you have a partner, so if it's you and somebody else who decided to go into this business together, you would by default be a partnership, and then you have to file Form 1065. If you decide on your own, or if you have another partner that you prefer to have a corporation, you can elect to be treated as an S corporation. And in that case, you would file Form 1120S. S corporation is governed by subchapter S, and it's called Small Business Corporation. To create a small business corporation, first you actually need to create regular corporation with the Secretary of State. And if you create it, and it's called C corporation, that's what we refer to it generally. And C corporation files Form 1120, okay? Then if you don't really want to be a C corporation and you want to be an S corporation, then you have to make a special election. There's a special form that needs to be filed. And then you can, on annual basis, file the tax return on Form 1120S. Now let's go back to limited liability company. This is a fairly new type of entity that was adopted in the United States. I think it was more like late 2000s. And so limited liability company is considered a hybrid entity, okay? Let me just put on a laser pointer. Notice it can be Schedule C if there's a single member. So if you're the only owner of the limited liability company, if you don't make any specific other elections with the IRS, you can just report the income on Schedule C and attach it to your Form 1040, okay? If you create an LLC and you have more than one owner or more than one member, you by default treat it as a partnership, and then you have to file Form 1065, just like here, okay? Now, if you can also make an election to treat limited liability company as an S corporation, or you can elect to treat limited liability company as a C corporation. So if you create an LLC, you can be any one of those, okay? And if let's say you create an LLC and you're a single member LLC, you're a single member of that LLC and you don't make any election, you operate as a really sole proprietor with just limited liability. In the future, you can actually make an election to treat it as an S corporation or C corporation. And in the future, you can also, add another partner, perhaps someone that wants to get into business with you. And at that point, it will be treated as a partnership. It's just a matter of how you report income and in what form. Again, I would not recommend making such decisions on your own. If you need to choose an entity, again, please go back to your attorney and CPA and decide what type of entity would work the best for you and what is your exit strategy again. So here I provided some business registration links, and you can follow these links. This presentation will be provided to you later after the session, and you can follow these links to obtain registration with the Massachusetts Secretary of State. If you are in another state, then it will have to be that other state's registration, or perhaps you want to register your company in Delaware. So you can do that. There's a link to obtain EIN, register with Massachusetts Department of Revenue. If you are sole proprietor, but you're doing business as a different name, then in Massachusetts, at least, you need to register with the town where your business is located. Some other states have different rules when business is conducted with the DBA. Okay.
Hey, I have some questions about the hobby versus business.
Yeah.
Can I? Yeah. So this person is an artist, and up to now they've done everything as a hobby with some commissions. However, she's starting to branch out and to do an online shop and some in-person pop-up shops. She said she doesn't have a storefront or plan to, just the pop-up shops. Can she do both? In other words, can I consider the commissions as a hobby and then the shops as a business? Is it an all or nothing proposition?
You can have more than one activity. So let's say if, although if you're getting commissions, that sounds more like a business, but you can have more than one activity. There could be limitation, or there could be some issues with the number of hours you spend on each activity, but you can, it really depends on how you want to treat it. If you want to combine both of activities under one umbrella, especially if you specifically get commissions, you may. It seems more like not just a hobby for you, and seems like more like a business almost. It really would depend on how long you've been doing it and whether you're trying to improve your profitability. I would really review these factors and whether you can rely on any of these listed factors on the slide to determine whether it's business or hobby. And again, reach out to your CPA. They may guide you exactly, because I don't really know your business and how it operates, but or your hobby, but you can have both, if that's what you want to do. I hope that answers the question. Any other questions?
Yeah, we did have one about vehicle deductions. I don't know if you want to take that now or wait.
Vehicle deductions, just general business vehicle deduction?
Well, he says he has a vehicle that he uses for his business. Can I claim interest paid for that vehicle as a business expense? Also, any add-on equipment like 7D equipment for the vehicle, can that be claimed on the taxes?
So we're gonna cover that later.
Okay, all right.
So I'm gonna wait for that, okay?
Okay, some of the rest I'll have to read through to see where we are with these. So we'll go ahead and continue.
Yeah, so I just have one more slide left here for types of taxes, what types of taxes you may have. It really depends also if you're a sole proprietor or you're a single member LLC, or you're a member of an LLC that has more than one owner or more than one member, and you don't have any other employees, you generally don't have payroll for paying yourself. Okay, so just keep in mind, so sole proprietor, if you're the sole proprietor, you have no other employees, or you're a single member LLC, or you are multiple member LLC, and you get paid, right? There is no payroll taxes. You cannot pay yourself the W-2 wages, okay? You can pay wages if it's to yourself, and you can, okay, I'm sorry, for the sole proprietorship and LLCs that are treated as a single member LLC or partnerships, you can pay wages to other people who are not owners in your business, okay? But not to yourself. Now, if you have an S corporation or C corporation or an LLC that is treated as an S corporation or C corporation, you're actually required to pay yourself wages. And therefore you're gonna have payroll taxes. And then you also, if you hire someone, you will have payroll taxes as well. So withholding taxes, it's usually when you have to withhold income tax or Social Security and Medicare from your employees. Massachusetts, we have income tax, net worth tax, tangible property tax, sales and use tax. Pay attention to that. You may be subject to sales and use tax on your business. Again, payroll taxes, local property taxes. And so net worth tax versus income tax, it would, and tangible property tax, that would depend whether you're an sole proprietor or partnership, or you're an S Corp or C Corp, because usually the net worth tax and tangible property tax applies to S corporations and C corporations in Massachusetts. And then there's unclaimed property. So if you give out gift cards, okay, or credits, store credits, you have to be aware that you have to file these reports, okay? Teresa, any other questions this far?
Yeah, back to the hobby versus business. If you realized in the course of the year that the hobby is slowly turned into a business, do you have to pick like a date? What if you're not sure, or is it just like the whole year is a business or the whole year is a hobby? Can it be split out?
I guess you would have to take a look at like how your hobby turned into business. You know, you might realize mid-year that it turned into business, but it maybe turned into business really previously. What was your intent originally? How did it turn into business? That's my question. I would say it really depends on your original intent, why it all of a sudden turned into business, to determine, is there a cutoff date, or maybe you can just treat it as a business from January 1st. You know, again, I would defer this, you know, I hope this answers your question, but if you really need a consultation, I would talk to an accountant that would better understand what type of hobby you had and why it turned into business, really.
Okay.
Does it make sense?
Yep. I have another hobby business question. This person, opposite direction. I have sole proprietorship. I started a separate bank account. However, I now realize that this may actually be a hobby. Can I close that bank account, take the funds, which I annually expect to earn less than $7,000, and it's not, I don't rely on it, you know, as my main income, and simply file the income on the Schedule 1, line 8? And have I already permanently created a business entity and that I can't decide to change from a sole proprietor to a hobby?
I think it can turn into a hobby, but I would not recommend closing the bank account, and you can take money out of it. Okay. I don't know if it's a sole proprietor. I mean, the money is yours. Once you pay taxes on it and you've net profits from sole proprietorships, your money. So you can take it. Okay. But whether it's hobby or business, I wouldn't recommend closing the bank account. If you're planning on continuing this activity.
Okay. What's the benefit or difference in filing a Schedule C as a sole proprietor versus a Schedule C as a single member LLC?
There's really no difference. No difference from a tax standpoint of view.
Okay. Okay, and then I have this, the vehicle question, and if I'm a single member LLC and I can pay other wages, what is the best benefit to pay myself? Am I able to withdraw anytime I'd like? And what taxes are associated with that?
Okay, so that's a very good question. I mean, all questions are great. But this is a very good question in terms of the taxation of self-employed. You basically, whether you're a single member LLC or sole proprietor, you're considered self-employed, right? So you report your income and deductions on Schedule C. And you may have other employees for which you file payroll taxes, right? Then net income is taxed on your personal tax return, and it's also subject to self-employment taxes. Half of the self-employment taxes, which is I think 15.2% or something like that. So half of that 15% is going to be deducted on 1040, okay, as a self-employment tax deduction. But then you have to pay 15% of the self-employment tax with your personal tax return. Okay, that's kind of how it's taxed. Now, if you want to take money out of the business, right, what do you have to consider? Well, first of all, money is yours. So you can pay yourself a distribution, basically check or wire transfer to your personal account out of your business account at any time. Okay, but you should consider whether you need to reinvest that money into developing a business. Maybe you need to hire more employees. Maybe you need to purchase equipment. So before you kind of pay yourself, right, you should consider those factors, basically your cash flow. You need to be in tune with the cash flow of your business. But generally speaking, as a single member LLC or sole proprietor, that's your money. So you can take money out at any time. I hope that answers the question. Now, yeah.
Go ahead.
Teresa, any other questions?
We'll wait. Go ahead and continue.
Okay, so we have just 7 minutes left. You know, I have good slides here. You can follow them and review them. You know, some of the deductions here, you know, on how to get your records in good shape, what type of deductions are available, including your home office deductions and health insurance, okay, your startup expenses and so on and so forth. Meals, note that meals and entertainment, non-deductible meals, generally 50% deductible with some exceptions for 2021 and 2022. Meals that are paid to restaurants are 100% deductible, okay? So there are steps basically that I provided that will help you to get ready for the tax season, and with information that, you know, you should provide to your tax advisor or your CPA to prepare your tax return. So filing a tax return and paying estimated taxes. This is a chart here that explains you when things are due, your tax returns are due, and whether extension is available. And so here's the due dates, the original, and then extended for each type of the tax return, okay? Also, for paying estimated taxes, I have a schedule here for each type of tax return when they're due. So if you're Schedule C, right, sole proprietor or single member LLC, note your last estimated tax payment is due on January 15th as opposed to December 15th for 1120S and 1120. All right. Now, the last quarter of 2022 for corporations will be due again December 15, 2022. And for the sole proprietors and single member LLCs will be January 15th, 2023. Okay, there's preparing for the upcoming year. I think you can review that on your own. It's fairly easy. And there's now for 2022 depreciation, we have special depreciation allowances. There's sections called Section 179 deduction. The limitation is $1,080,000 for 2022, and phase out starts if your purchases are, at $2.7 million and over that. And it can be used. So this allows you 100% deduction, basically, if you placed certain assets in service during the year. It can be used for new and used assets. And here's a list of assets that you can depreciate using the Section 179 deduction. There's also this 100% bonus depreciation allowance for 2022. And that includes tangible property depreciation on the makers with a recovery period of 20 years or less. And then there's including computer software, qualified film, television, live theatrical productions, water utility property, but generally it's not limited to this. Okay, so it's any property that has a recovery period of 20 years or less can be 100% deducted in 2022. It also can be new or used. Notice that for 2023, this allowance will go down to 80%, and 2024, 60%. Meals deductions already mentioned. There's home office. So there's home office regular methods. I have here indirect expenses that can be deducted if you have office in your home and reported on Form 8829. Let's go to automobile expense deduction. So there are two methods to expense your vehicle automobile expenses. Okay, it can be either actual or mileage. Okay, and determine whether your vehicle is used, what percentage of your vehicle is used for business depends on the mileage used for business versus total mileage for the year. Okay, commuting expenses between home and business location within the area of your tax home are not deductible. Please note that. But if you have an office and you work and you have home office, and let's say you travel from your home to a business, or you have another job and you travel between them, there's a way to deduct certain commuter expenses as well. And also when you go to visit client or you go on errands for business, that mileage is considered business mileage. Notice the standard mileage rates for 2022 is 58.5 cents per mile from January 1st, 22 to June 30th. Starting with July for the second part of the year, the mileage rate increases to 62.5%. Note that actually what type of actual expenses can be deducted if you not choose using standard mileage rate. So for example, if you purchase vehicle, you can capitalize that vehicle and depreciate the business portion of the vehicle based on this business use percentage. Okay, if you have lease payments, the same thing, the portion of your lease payments can be deducted using this business versus personal use percentage. mileage percentage. And then if you, let's say, purchased the vehicle, so first you can be depreciating what you, let's say you purchased it for $25,000. You can depreciate that $25,000 based on your business use. But plus, if you finance that purchase, the interest on that purchase can also be deducted. Okay. Also, gas, oil, tires, repairs, insurance, registration fees can be deducted. Okay. Now, again, once you have the totals for all of these expenses based on your business versus actual mileage, that's the percentage that will be deducted on the tax return. Okay. Now, Teresa, what was the question again?
Oh, about the vehicle. Let me go
Yes.
back up here. Can I claim interest paid for the vehicle I purchased this year as a business expense?
So I think I answered that question.
Okay.
Yes,
He says I'm
portion,
go,
business
go
portion will be deducted.
okay. And then he says I'm really close to starting the business. Should I purchase my LLC before the end of the year to take advantage of that? The vehicle deductions.
Purchase the vehicle and purchase LLC.
He already has the vehicle. He purchased the LLC. He's getting close to starting his business.
Okay, so I mean, regardless whether you're purchasing or not, it depends on whether any of that business vehicle expense was business use. I mean, it's not 100% deductible. Okay, it's only the business use proportion that would be deductible. I would talk to your CPA what he would advise. It really depends at which stage of the business you are, whether you need to set up an LLC or not. You really don't have to set up an LLC. You can operate as a sole proprietorship unless you're purchasing that LLC. You know, it seems like you're purchasing somebody else's business. So it depends on whether you have financing available, how you're going to purchase that LLC. And when your business use, because on the next slide here, we have business startup and organizational costs. And it really depends, you know, what your business startup expenses are. So startup expenses can start before you actually organize the whole business, you know, and they can be deducted or capitalized and deducted after the business is set up. I hope that answers your question, but again, I strongly recommend, you know, reaching out to your accountant. I have some additional cost slides here that kind of explain some of the, I guess, concepts we've discussed here. And there's also the small business health care tax credit that's available. Please look into it. And then if you would like to contribute to retirement plans, there are different limits for 2022, up to which amounts you can contribute to an IRA, SEP, or simple IRA, 401k. And I'm sure our friends at Eastern Cambridge Bank can help you to set those up if necessary. And note that to take a deduction for 2022, all you need to do is to set it up and make a contribution by the deadline of your tax return. Okay, there are some additional slides that can help you with address your questions, but thank you for attending the seminar. Unfortunately, you know, we couldn't go through all of the slides, but I did want to talk about the Inflation Reduction Act today as well.
Okay.
I am
Yeah.
done.
Okay, great. I will send out to everyone this afternoon the slides and the link for the recording. The recording probably won't post until tomorrow, but you'll know where to find it. I don't know if Robert or Johnny has anything they wanted to add.
Yes, I do. Getting back to the last question, I know it's getting later in the year, and that gentleman was asking about filing the LLC, but keep in mind, if he files the LLC, he's in Massachusetts, he'll pay $520 for that. Plus, he'll be required to file a tax return, which might be $900, $1,000. So that's something to keep in mind. I would definitely talk to a CPA about that. That makes sense.
So to comment on this as an addition, Robert, so if it's a single member LLC, there's really no separate tax return. Again, it's Schedule C that's attached to your 1040. The separate return would be required if it's a multi-member LLC, if there's more than one owner. But yes, I agree that if the new business or not the businesses or, purchased, there's $520 fee, $20 for the electronic filing for organizing new LLC in Massachusetts. Every state has different annual fee for organizing a business in their state and registering it with Secretary of State. So it could be less than 500, like for example, in Delaware, I believe it's $250, $260. And in other states, the fees are much lower than in Massachusetts. But keep in mind that it all depends on where your business is located. You can't just, register it elsewhere. So for example, if you decide to register your LLC in Delaware, and then you have business actually in Massachusetts, you have to register both in Delaware and Massachusetts because this is where your business is located physically.
Okay, thank you.
Okay, and I'm sorry we weren't able to get to everybody's questions today. I know this is just one of those topics that generates a lot of questions, but as she mentioned, definitely reach out to your accountant. You'll have some basic knowledge to make sure you're getting a good answer from them. Thanks to our overview today, and I will get those slides and the recording to you for your review. And thank you everyone for joining us today. And we wish you all happy holidays.
Thank you.
Thank you.
Thank you, everyone.
Thank you.